What's going on, family? Peace and love. So I got some stuff that I want to go over with y'all. It's a lot of stuff going on around us, right, that we may not be aware of, we may feel like we don't have time to pay attention to. But these things are going to be directly affecting us in a minute. There's a change that's coming. And I know that some of y'all might think I'm playing or I'm radical or stuff like that when I put out certain information, but I'm telling you, I took this time off to do some very deep studying, and I'm also not playing when it comes down to the predictions and me being a predictive investor to be able to tell what's about to happen. These things that's about to happen, you ain't even gotta take my word for it. What I'm gonna do, right? I'm on my way to the condo. What I'm gonna do is I'm gonna share my screen with you, and we're gonna go over the real data of what it looks like in the economy and the market right now. We're gonna use the stock market as just an example of some data that we can look at, and we're gonna see what it says to us, right? We're gonna look at it ourselves. We're not gonna trust any talking heads that's out there on CNN and on the news and think that they telling you the truth. We're gonna trust ourselves. All right, we're going to look at the data and we're going to be able to determine what's happening. Is something happening? Should I be preparing for something? Are you in the best position for this next economic transition? Let's find out. All right, let's hit the charts. Don't be scared of the charts either. I mean, some people, I feel like when you see charts, you start thinking about school or think about statistics and math and, just going too far with it, right? This is not that complicated. All right, we're gonna look at the charts so we can really see what's going on. Don't hide from it, don't run from it, just listen up. All right, let's go. All right, family, I'm back at the computer. I wanted to share my charts and my computer screen with you because I actually want us to go over and analyze this data, analyze the statistics and what the market is saying to us. So we're not going to listen to those talking heads that's out there, everybody saying this and that about the economy and, saying all types of things on the news, propaganda, all of that. You can get lost in that. And so we're going to look at it ourselves and we're going to analyze what is it saying right now. And so I'm going to go over these 9 stocks that I have right here. And I chose these 9 simply for the fact that they had a better fluid, a fluid type of way that the market moved. Okay, so it wasn't like all over the place, going up and down randomly all over. This has a little bit of rhythm to it, and it's easier to understand the stocks that have a nice, good rhythm to it. And these are the stocks that I've chose to watch over the last couple months. I actually just started watching these stocks, I think around this time, like in July. The broker that I'm with right now, I actually like this broker because I used to just have currencies that I was trading in commodities. This broker has currency, commodities, and individual stocks. And so I'm going to go over just these 9 individual stocks right now and just look a little bit about what the story that it's telling us. And then after that, I'm going to post another video that I recorded back in March about the stocks in general. So the top 500 stocks just shown on one chart, and also going over what the market actually does and what the causes of those things are when you're actually looking at why it goes up and down. And so when I plug that video in, that video will go a little bit more into detail about what happens in the economy when we see those things going up and down. All right, so let's just jump in there. I'm gonna explain this really simple. I'm gonna break this down real simple. There's no reason to overcomplicate this stuff. Like, just because you're looking at a chart doesn't mean you can't fully understand it right when you see it. And so just to break it down as simple as possible, these blue lines, 6 of these blue lines here, these are zones. And so these are just support and resistance zones where I noticed that the market made a major move once it got to those levels. And so this zone here, as you see, it tapped it 3 times and then it shifted up. This zone up here, you see it tapped it twice here, and then it also tapped it before it went up, and it came back and tapped it again, so that's a pretty important zone. And this third zone, it tapped here and went, straight down for a nice chunk of time, and then it rose up, barely got through there again, and took another turn down. And so these 3 zones right here, I broke down each chart in that same type of way, where these are going to help identify where the major price points at on each chart, as soon as the chart is opened up, as soon as you see it. And that's the most simple thing when it comes down to analyzing this data as well as trading. And it's the most simple thing, but it's the most useful thing if you can develop the patience to be able to see, like, okay, once it hit this part or get to this level, then it's something to watch, okay? All right, so this right here that we're looking at right now, this first one is Visa, like Visa credit cards, stuff like that. It's the daily chart, so each one of these candles represents the price movement for one day of the stock. And so when it came down to Visa, Visa and Mastercard is very similar. It's really like one of the same. So when you see both of the charts, you'll see what I'm talking about. But as you can see, it kind of hit here and went back and forth, hit here twice, and then it rose up, hit the zone again, went up, made a high, and then it came all the way back down to this other previous low before it went up and made a slight higher high, and then have come down to since then to almost this low here. And so if you can see that when we were going back and forth right here for the beginning of 2019, once we hit May, we kind of skyrocketed and was going pretty good all the way up until July, the end of July. And then as we can see right here, we're definitely not going as strong up as we was before for this time period right here. So we know that for a fact. That can't be disputed. That yeah, we was going up, skyrocketing here. We hit that point, and then now it's kind of jagging it along, not going as fluid as it was before with Mastercard. I mean, with Visa. And so here's Mastercard, where like I said before, it's pretty similar. Where it kind of came up and hit that bottom twice, and then it went up again, came back down, touched that zone, went up and made a higher high, but then came back down and made a low, the same lower low as this one, and then it went up. The only change with this one is that this one actually made same high here, went down and then made a higher high. That's the only difference between the two Visas. This one didn't go all the way up to make that same high versus Mastercard. It went all the way up, made the same high, then dropped and made a new high. So that's really the only difference I see between those two. This one here is McDonald's. As you can see, McDonald's kind of has a more fluid upwardly movement. But again, it hit this price here, came jackled it down back and forth for a little while, hit that price again, and then it made a new low. So that's definitely a sign that it's like, okay, it's definitely not as strong as it was going up here. It's a little weakness happening. We don't know where it's going to go from here. It can go up here and fall. It can go straight down, or it can go up and make a new high. We don't know what the market is going to do for sure. Nobody knows that. All right, so I don't know everything. Nobody knows everything, but we can definitely see from what's happening it's not as strong as it would have been since what is this the beginning of 2019, where it was skyrocketing up, hitting just a little lower low, a little downturn with McDonald's. When we look at Facebook, this is Facebook's chart here. We see it went up and then it made a lower low, but then it made a higher high. So to me, that's really just kind of still going on a sideways movement. And so Facebook doesn't have a really strong up, even though from May to July, for those couple months, it definitely had a nice strong push up, but it hasn't had a nice flow like we saw with the other one prior to McDonald's. So it's kind of going back and forth, and now it's really going back and forth, just going back and forth, figuring out which way is it going to go up. And when it goes back and forth like that, it usually has a nice big jump after that movement. All right, so this one is Amazon, and if you notice, Amazon looks very similar to Facebook. Like I guess they're somewhat correlated in the way that they move. They're both online conglomerates. We don't know what the other similarities are, but it seems like they're very correlated when you look at the movement of the pricing. And so it kind of, went up, but it made a lower low, and then it made another high and came back down. So it's still, in my opinion, just going kind of sideways with it. And it doesn't have a strong push up, but it definitely has some nice downward momentum right now with Amazon. All right, and this one here is Procter and Gamble. Procter and Gamble, to me, out of all of the nine stocks that I've been looking at since July, has the most strongest move up. It's a very strong stock. I mean, if you bought it back in May 2019, and you rode it all the way up, it would have been the best investment out of all of the stocks that I have up. But I wasn't watching it by that time, so I wouldn't know, or I wouldn't have been able to get inside of the trade itself. But if you see it's so strong, really Procter and Gamble has a lot of household products, and so things that usually you still have to buy even if you're going through a downturn, and that's in my opinion the reason why it's so strong, because most people have these items in your house. They make, trust me, out of all the products they make something that you have in your house right now. You can go and look up Procter and Gamble on Wikipedia if you want to see the actual products that they manufacture and why it seems like it's just on an upward move, even when other stocks are having somewhat complications. So that's Procter and Gamble is kind of going straight up, but again, it still made this higher high, and then this next time it didn't come up and make a new higher high. It did that once here and kept going up, but it's definitely just a little bit not as forceful in my opinion, but it's still, like I said, the strongest stock. If this would be the last one that I would get on the sell with because it's so strong. All right, here's Microsoft. This is Microsoft, and with Microsoft, it kind of went up and then made the same low, and then it started to make a nice run in May, like the rest of them did, up until July. So May to July has been going, pretty upward, a nice strong move up, and then since then it's just been going sideways, which telling us it's not moving up as strong as it was before. And so we'll see what it does. This is Tesla. Tesla had went down for quite some time until again when it hit May, then everything kind of made a jump up until July, and then since then it's just been on a somewhat of a sideways move as well. It's not as strong as it was during these months here, for sure. So I don't know if it'll make a new higher high, but it's definitely not going as strong on its way up there. And then this last one is FedEx. With FedEx, it was making a strong downward movement, like very strong until May. Like hardly any pullback at all going back up. It's just little spurt moments going back up, but it's a nice long straight line down up into May. And so to me, that means that because it was going so hard down, even the rest of the stocks that had the little plump up in May, when they actually, when the market had the pump back up, this didn't pump, back up as far. So when it hit July, it still was kind of, skitter scattering up and down, made a little further up, went down, and then here in August, not sure what happened in August, but then they a nice push up in August, and then right here is actually when I made I mean, woke up. I think this was yesterday, and I made a 250 pip move down, jump gap down. I mean, as soon as you're woken up in the morning, the price fell all the way that far. So, not really sure what's going on with FedEx. I don't follow the fundamentals as much to know what's going on with the exact company, but what I do know, we had a nice, strong momentum to the downside, and so my opinion is with the probability of it hitting here and going down again was pretty high. I just didn't have any expectation that it would jump that high. All right, so that's the rundown just of these 9 stocks. So as you can see from the data, not from my own opinion, we're not going as strong as what we was before in the beginning of the year. That's clear. Where we're going to go from here, nobody knows. But what we do know is definitely not as strong. All right, I'm gonna drop another video, like I said before, that talks about what happens in the economy when these stocks is going up and down. And I'm going to drop that video probably right after this one just so you can have a look at it. All right. Peace and love, family. This is Tre'Leon Bay back with another price update for another asset class. So today we're going to be looking at the stock market. Just a quick snapshot of the U.S. stock market right now. This chart that we're looking at is the S&P 500, which is 500 of the top traded stocks that's traded publicly on the stock market. We're also going to do a quick look at the Dow Jones top 30 largely traded stock with the largest market cap. So we're going to look at both of these indexes. They both move pretty similar, and they're both the same asset class regarding stocks in the U.S. All right, so the current chart that we're looking at is actually the monthly time frame chart that we're looking at right now, meaning that each of these candles represents the movement in price for stocks for an entire month. All right, and so this is the S&P 500, top 500 publicly traded stocks is indicated in this index. So with this particular broker, if we go all the way back as far as it goes, it really doesn't. It only goes back until this chart actually only goes back to 2004. All right, so of course the stock market was around prior to 2004, but with this particular broker, the data that they have available, it's only going to take us back to that far. All right, so let's just talk about what happened in the stock market since that time. Okay, so we have from about 1994 to about the 2000s. As you see, the stock market was on a nice rise. Around this time, it was actually a dot-com boom. So it was when, the internet was really hitting it big, and there was a whole bunch of tech companies and internet companies that was coming out at the time. And, everybody was just making a bunch of money on the internet with these new internet companies to the point where it was all types of companies coming out and people were just buying anything. You were buying stocks in any company that had to do with the internet, even if it wasn't a good company. And so everybody was coming out with the next best .com business, looking for investments. And so this is where we were rising at. Then around the 2000s is where we had that .com bust, meaning that all of that came to an end. We started to notice that a lot of the companies that folks were investing in weren't good companies from the get-go. And so it went on a sell rampage up until about 2002. All right, then we went on another rise in the stock market, which was at that time around, I guess it's about 2003, 2004. We started to have a rise in the stock market mainly because of the housing boom. So I was in the real estate market. I got into the real estate market around a housing bust. But around this housing boom, what I come to find out after the fact is that during the housing boom, basically anybody who if you had breath inside of you, you could get a house, right? They were just giving out houses like hotcakes. Right? It didn't matter what credit you had, it didn't matter how much you were making on your job. It was just basically you get a house, you get a house, you want 5 houses, sure, you get approved. And basically what happened with that was the banks were giving out mortgages to people who couldn't afford it and they knew couldn't afford it, but they were just ready to hypothecate everybody that were willing to walk in and sign the paper. And so that at that time, this is when this rise happened in the economy, made the economy feel real good, like everybody had money at that time. It was very inflated. You know, the loans that they were giving out for the homes eventually started to top at about 2007. And then once all of the adjusted mortgages started to come into effect, this is when we had the big housing bust where everybody went into foreclosure. Everybody who was over leveraged or who couldn't afford the mortgage in the first place, um, you know, the truth in lending and all types of things started to change and happen around this time when the housing bust came, because that's when we had the major foreclosures happening all around the country at that time. So that lasted to about 2009. Really, it lasted up until about 2012. We were still really in a housing bust, where the housing market still wasn't really at a good point. Wasn't on the up and up yet. So about 2010, 2012, we started to get some large investors, some institutional investors and hedge funds started to come into the market and put some money back into the housing market, and that started to push it back up. So around 2009, 10, 11, 12, we started to get another rise in the stock market here. And this rise is, it's due to a few things. And if you notice, this is a large rise, right, compared to we just went from 2004 all the way to 2012, and we were inside of this area here. And then all of a sudden, we get in 2012, we start really skyrocketing on the stock market at that point. So there's a few different factors of what's going on when it comes down to the major rise that's happening. Number one is called quantitative easing. So we, for short, is QE. And quantitative easing is basically just them printing fiat, is printing how much they want when they want, and at that point, that causes basically a lot of influx of purchasing in the market. And so when we went through that big bust, that last big bust in 2007 and 8 and 9, they started to print a whole bunch of money to try to get people to come back in the market and feel comfortable coming back into buying different asset classes to basically pump the market artificially. All right. So once that started to happen, we started to see quantitative easing take its toll, and pretty much everybody just started to put their money back into the stock market and started rising up pretty fast. Then on top of quantitative easing, we also have uh, they're giving a lot of financing to businesses right now. So before we had the housing boom where they were just giving anybody a house. Now it's like a business loan boom where if you have a business, you can get a loan. And if you're a business owner right now, you probably receive several messages from people like on LinkedIn and Facebook, basically, are you looking for a business loan? They would just like anybody who has a business, they're just willing to give you a business loan right now, which is, of course, another artificial way of pumping money into the economy because a lot of these businesses don't really have projections or profit to be able to pay these business loans back. But pretty much, if you have a business, you can get a loan right now. So that's another reason why we have a lot of money in the market of people buying these stock assets right now. So there's a lot of overinflation when it comes down to the numbers that's in business right now. So the projections of profit compared to the debt that businesses are in is very skewed. It's much more debt than it is profit, even though we see this big raise right now. And then on top of that, we also have large companies that are doing stock buybacks, meaning, for example, Apple is buying their own stock. The people who are in the company, the shareholders or the folks that are, high up, they're buying their own stock. And so what that's doing is just really prolonging the inevitable. They see that the market is coming down. Their worth isn't as much as what the stock is portraying, but they can prolong it a little bit if they buy their own stocks, which makes the market look like it's still going up. All right, so that's another factor that's going on. And then we also have the trade wars. So the so-called trade wars between China and the U.S. right now, which is basically an indicator for a lot of investors for risk off. Okay, so we always have a place in the market where sentiment is, buy, 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 and then you also have another time in the market where sentiment is, things are starting to slow down, and people are starting to get fearful. And when it comes down to the stock market, fear can make things fall really fast. Okay, so when it comes down to those fear, the first people that are going to feel it is anybody who's in the stock market that's over leveraged. So if you own stock and you're over leveraged, meaning that you have, too much stock in one basket, or if you have too much of your investment portfolio in stocks and not in other asset classes, then that leaves you exposed when you're over leveraged. Okay, so the people who are going to feel it first is the people who own common stock. They're going to definitely feel it when the market takes a turn to the downside. Also, the people that are going to feel it is people who have jobs with these top companies. As they start to, tank on their stock pricing, then they're going to start some layoffs. And so people who have jobs with these companies, they're going to be liable as well to the turn of the market. And so with all of these indicators coming on, as far as the fundamental analysis of the stock market right now, there's a lot of indication that we're just so overinflated going from the price that we were at in 2012, 2007. I mean, 2007 was supposed to be our height, our big boom that we had, in 2007, where which was everybody felt like they were, making money. It was at the top. And so if this was a boom, what the heck can we call this? It's all the way up there, right? So that's super overinflation. And so anything that if this was a bust, if this fall right here from here to here was a bust, if that was a stock market crash, what people say, oh, the stock market was crashing. If this was a crash, then what are we going to do from here? I don't even think we can call that a crash. If this thing tanks, it's going to tank pretty hard. All right. So if you look at the price movement, then you see it just was kind of making higher highs, higher lows is what we call it. Going up, coming back down, going up, coming back down. Higher highs and higher lows. This was the first time that it pretty much made a lower low, but then it also went back up and touched that high again, but it didn't make a really new high. And then we have this big red candle for the month where the stock market is on its way down pretty hard. All right, but if what we want to look out for, because right now it still has an upward momentum that we're showing here. But what I'm looking for to really show that we're in really big trouble is if we start seeing patterns that look like this. So if we see price come down, pop back up for a while, and then start making lower highs, that's when we know we're in trouble. All right, well, not we, but the people who are actually over leveraged and actually own stock, that's when we know folks are, they'll be in trouble. The companies will be in trouble right now if we start seeing patterns and price start making these type of patterns inside of the market. Okay, but the good thing is if you trade, you can make money when prices are going down or if prices are going up. And I'm on the Bears team for stocks, so my view is a little skewed. So I believe that, shorting the stock market when it's going down, that's how you can make a profit right now. That's my view on it. So I'm in for a sell. I believe over the last month I've been selling the stock market now. So I'm in for a sell myself. But let's go and zoom in and see a little bit closer on the price. So we see the price is making this big red candle here. This is where the price started for the month, and this is where we at towards the end of the month, all the way down here, which is a pretty major move. Let's zoom into a weekly chart. We can see here that even though the stock market was going up pretty consistently, we started to get a little choppy once it hit here. This price went down. We didn't get in that much higher here. Took a further down, and then again we touched the same spot on a basically it's called a triple top, and we hit that same price, and buyers wasn't able to push it above this price, which means things are slowing down. The economy is slowing down. It's just not pumping out as much fiat as before. They don't have a lot of room to pump out much more fiat than they already have done. We're just so overinflated that that's just where we're at right now. So uh, this is where we're at for the week here. We still have potential that we can, make a bounce and go back up. You never really know what price is going to do. You only can go by probability. So we can bounce up right here and make new higher highs. We can touch this green line here, which is the 200-day moving average. We can touch here again like it did before, and just go back and forth for a while, and just go up and down without falling all the way down. All right. So in my view, I think the U.S. economy is done. Is at its wits. It's just gonna tank. That's just my view, though, right? But what the market can do, it can just simply just go up and down for as long as it wants before it goes up or down. It can just do this for a whole year where it's just going up and down. All right, so we really don't know what the market is going to do. It can do that if it wants. All right, so let's take a look at the US 30, which, as you can see, looks a lot similar. This is the monthly time frame that we're on right now. Down to the weekly, it almost looks identical. Let's zoom all the way into every 4 hours is what this candle is. And right now we're at a spot where the market might decide to do a retrace up again from here, or it might continue down. If it ends the day around this price, my guess is next week, since the market closes on for the weekends, next week on Monday when it opens back up, it's probably gonna, maybe do something along the lines of that, and then continue on its way down. Continue this tank on the way down. That's how I see it happening for next week. But it can go up and then tank down a little bit further. Never really know. But this is kind of how I see it for the return for the next week. Peace out, family. If you have any questions, definitely hit me up. And yeah, I'm gonna be just doing more videos in your face to let you know that this thing is real when it comes down to the change in the economy and the shift in the economy. It's not a game. It's happening. Prepare yourself, and I'm gonna be there with you until it does. All right. So subscribe if you haven't already subscribed. If you're on YouTube, if you're on Facebook, just don't scroll past and just not engage. If you watch the video, just engage. Say something. It doesn't matter what you say. I'm a real person. I'm very communicative and open. So yeah, say whatever you feel. All right. Let's go. Let's get involved. Let's do something together as we see this happening, and not just ignore it like it ain't happening. All right. Peace.